Good morning. My name is Jose Munoz, and today we're going to be talking about BlackRock, aka the world's largest asset manager. And by the end of this presentation, I'll have four recommendations for them. So here is the roadmap and the 30-second snapshot. We're going to take 5 minutes to talk about the six analyses I chose and 4.5 minutes on recommendations. So BlackRock has $14 trillion in assets under management, world record. They have $24 billion in revenue, and it's up 15% year over year. They have a record of almost $700 billion in net cash flow. They just started a new software called Aladdin that runs $21 trillion for their clients. And their main three engines for growth are iShares, active index funds, and private markets in Aladdin. So why would I choose BlackRock? It's a great fit for any accounting major. They focus on portfolio management and risk analytics. They also use a lot of Excel and valuation in Aladdin's day-to-day operations. Um, I also align very well with their mission of financial well-being, and I think there is great career growth opportunity in BlackRock. So now to the analysis. So their specific main industry is classified as investment advice. This is important because it helps us identify their competitors, such as Vanguard, State Street, and Fidelity. Their main signal is that um, they're deliberately trying to move into a higher fee adjacent industries so they can boost their revenue. So two main forces are dominant after doing the pastel analysis. We have the political and the technological. Um, Political because we keep seeing anti-ESG laws in 21 states, and we have the Texas antitrust case. And in the tech sector, we've seen crazy advances with AI, and that is changing the way BlackRock develops Aladdin, their new software. Also, the Fed cuts, because of Fed cuts, they had a record net cash flow in 2025. So, from doing the Porter's Five Forces, we can see that the rivalry is very high. There's three big companies, and they all compete on the fee price. The threat of new entrants is low because these companies are so big, it's hard to enter if you're not a scaled company. And Aladdin blocks that entry. Substitutes include things such as crypto, and the supplier bargaining power is low to medium. The buyer bargaining power is high since they're always looking for the best fees. Um, in total, it's a moderate industry, and BlackRock is at the top of their game. Here are some of the complementers, aka the six fours. So in the distribution category, Schwab and Fidelity help with the iShares of BlackRock, complementing them. In the tech industry, Microsoft and NVIDIA are the power behind Aladdin. Index funds such as the S&P 500 legitimize the iShares from BlackRock. And this is a competitive advantage because no rival has all three complementers like BlackRock does. Um, so they do have a sustained advantage because of Aladdin, because of the iShares, and because of their huge data network. Their distribution and their brand can be categorized as a temporary advantage. And the private markets, Aladdin is a parity because it hasn't been proven yet. It's a great advantage as of projected to be a great advantage, but it's a parity right now because it hasn't proven itself. Um, so there are five resource gaps: retail brand, crypto, APAC, talent, and the ESG narrative. So further down in the presentation, recommendations 3 and 4 will help attack what BlackRock really needs. So their business level strategy. Um, Rare, both generic strategies are used at once, which is very rare. Their cost leadership is like a passive in passive ETFs is a huge advantage. And their differentiation in tech, using Aladdin, leveraging tools like Aladdin, puts them at the top of the game. Having both of these business level strategies really makes them stand out and differentiate. Now we're going into the corporate level strategy. So do they build, do they borrow, do they buy? No, they do all three of them. In 2024, they really bought into the industry, putting 26 billion in 18 months to build Aladdin. And I mean, yeah, they are basically they can buy their way into the market. They can borrow by doing partnerships with Microsoft and NVIDIA. And as you can clearly tell, they can build how they've done with Aladdin. So my first recommendation would be to productize the whole portfolio bundle for wealth channels. So using the Aladdin platform, the iShare model portfolios, the analytics from their data networks, and mixing it all into one subscription, that would be really appealing to potential customers. And why now? Because it defends iShares from other fee comparisons because their value that they would be creating by offering this bundle would truly be unmatched. And my second recommendation is to leverage the tools available at our disposal in this current world and build an Aladdin AI layer. So Preqin is all the data that they've been able to collect. And if they were to leverage that data to train an AI model into their platform, they would really be able to provide a competitive advantage and compete with companies like Bloomberg. My final two recommendations would be to lock in private markets with talent and carrying long vesting equity for these potential employees. So if you offer some vesting equity for employees, it's very likely that they'll stay for a longer time. So these places are recruiting right now. Sorry. And securing top level talent would be key for the growth of the company. My fourth recommendation would be to build an Asia Pacific distribution system. So they should use both the build and borrow methodologies to penetrate the Singapore, Mumbai, and Tokyo markets. They could partner with DBS, HDFC, or Nomura, and this would close their geographic gap, making their reach worldwide. And yeah. So, three words: protect, pivot, and prosper. What does we mean by this? Protect. So BlackRock should implement strategies to protect their iShares and to protect Aladdin, because this holds like the public markets castle, you could say. This is one of their competitive advantages, and focusing on protecting them would sustain their growth. Um, they should pivot their alternatives to 1 trillion by 2030. By pivoting and investing more, they will basically win the majority of the market share in the private markets, and establish their dominance. And they should prosper. They should try to find ways to increase their tech revenue past only 20%. Maybe not only be a player in the system using tools like Microsoft or NVIDIA, but maybe they should build their own. They have so much capital at their disposal that they would benefit from expanding their tech sector. So if you execute all four recommendations mentioned previously, BlackRock will become indispensable, and they will, I mean, they're already one of their top competitors in the industry, but they will reinforce that, and they will reinforce their sustained competitive growth as a company. So thank you very much. If there's any questions, feel free to ask, feel free to reach out. And I apologize that the pace was a little fast. There was just a lot of content to get through in 10 minutes. Thank you for your time, and I'll see you in class. Thank you.